Hello friends, today let's discuss about a nuance in the investment retirement account, in particular Roth IRA. This is all about Backdoor Roth IRA. Welcome back to Invest and Grow. Let's get started. And if you're here for the first time, consider subscribing. All right. In order to get started, let's take a step back to understand what is the difference between traditional and a Roth IRA, because it's important. Only then we can understand backdoor Roth IRA. So, in a traditional IRA, it's all both traditional and Roth is for the retirement saving. So every year, for example, in traditional IRA, you contribute 6,000 in your traditional IRA. And as you see, for this example, let's take an hypothetical example of the household income of 100,000. And if you make an 6,000 as a contribution, what happens to that year? Your taxable income gets decreased for the amount of contribution that you made. So only 94,000 gets taxed. So the biggest advantage is that you get tax benefit for an year on year. So, however, the while you withdraw the amount, let's say after 70 years or so in your retirement, when you withdraw the amount, you pay the tax at the time. So it is a tax deferred growth. However, the withdrawal that you make finally will get taxed. On the other hand, in the Roth IRA, what happens is that let's go with the same example. The household income is 100,000 and the contribution that you make is 6,000. You you do not get any tax benefit for that contribution that you make for that year. So you literally pay the tax for your entire income. So what is the biggest benefit of Roth IRA? So since you have paid the tax on year for the entire income and you did not claim the deduction for the contribution that you have made, when during the retirement, let's say in 70 years or so, when you withdraw the amount, it is totally tax free. The amount that you contribute grows as totally a tax free, and the withdrawal that you make is tax free. So that is a key difference between the traditional Roth IRA, and it's purely on individual circumstances whether you wanted to get tax advantage on year and go for a traditional route, or you rather wanted to enjoy the tax benefit later on and go with the Roth IRA route. Having understood this, then what is this specific call out about this backdoor Roth IRA? So if you look into the Roth IRA, there is an income limit in specific. For example, Roth IRA is not eligible for all folks. In particular, it's based on the income limit. Let's look into the income limit for 2020. And every year, this income limit varies, and as said by the US government, for example, for a single filer, if you are a single person or you're filing independently, when your income limit should be under 139. This is based on 2020. Only then you are eligible, you can really open an Roth IRA. If it goes beyond this particular income limit, you are simply not eligible. And whereas if you're doing a marriage filing jointly, the income limit should be less than 208K. So this is the what is it, a guideline in which you can make a contribution to an Roth IRA, and if you are not meeting this criteria, it's simply you are not eligible to qualify. However, with this backdoor IRA, Roth IRA, there is an option that you could do. That is this all about. Say, what is this backdoor IRA? So, while the IRS or the US government wouldn't allow you to open up an Roth IRA account, there is a loophole which was introduced in 2010 intentionally to promote this taxable savings. So what happens is that instead of you actually opening up an IRA account, there is an option that you could open a traditional IRA account, then roll over this amount to whether you filing independently or filing jointly. You open a traditional account, then roll over this amount to your Roth IRA. So let's look into an example, right? Let's say let's take an hypothetical example. You have literally 100,000 that's contributed over time, which you wanted to roll over. So since you had opened a traditional account and you would not have paid, or you would have enjoyed the tax benefit on year, what we would end up in happening is that when you roll over this entire amount of 100,000 which is sitting on your traditional account, that amount becomes taxable for that particular year, wherein you literally you move this all this 100,000 in this example to this is really an income, but I'm just throwing as an example that let's say you have an 100,000 in your traditional IRA account. You can move entirely to the Roth IRA without any issue, but the key thing is that you will end up in paying tax for this 100k. It 100 is 100k is an hypothetical example. Let's say in a practical case, let's say you have 20,000 sitting on your account, traditional IRA account that you contributed over time. You move to an Roth IRA and roll over that particular amount. When you roll over for that particular year, you will end up in paying tax. That is the biggest. I mean, that's how you do. There is another option that you could do as well when you actually contributing to your traditional IRA account. So what you would do is that you will file a form called 8086. So what this means is that when you make these contributions to year on year, you would say that here I am making a contribution to my traditional IRA account. However, I do not want to enjoy my tax benefit, meaning you explicitly let IRS know that though I would have made a contribution of 6,000, for example, in this year, I am not actually claiming the tax contribution exception. So you end up in paying tax for that year on year. So the biggest benefit is that when you use that route, when you do a rollover, you are not going to pay any tax because you made an explicit option or exercised an explicit option saying that you are not enjoying a tax for that particular contribution year on year. So this may look complicated, but this is simple for anyone who is falling into this bracket, higher tax bracket. I mean, higher income bracket, and still who are wanted to take advantage of Roth IRA, and this is an option. So either you pay the tax when you do an end-to-end rollover, or you would have made a conscious decision when you had contributed in a tax, I mean the traditional IRA year on year, you do not enjoy the tax benefit and then on every year. So that's on a very high level. And one thing to keep in mind is that the year-on-year contribution for whether it is a traditional or a Roth IRA, the annual limit is still applicable, 6,000. So basically, you would like every year the maximum contribution that you could make is if you are under 50 years old, you maximum that you could do is 6,000, and if you are over 50 years, you could go additional 1,000. So that's on the nuances, and let me know if you have any comments, questions. Again, this you need not exercise this backdoor Roth IRA if this income slab is not this complicated. It's really for individual who somehow wanted to take out tax savings as their taxable incomes goes beyond certain limit. That's it. If you have any questions, leave a comment, and if you like this video, give a thumbs up, and do like this video. Thank you.